It's time for Overlook Stocks. We're joined by Kevin Horner, the Senior Manager Trading Services at Charles Schwab. We're highlighting Centrus Energy today. That's our Overlook stock. They've been on a run to new all-time highs, now rallied, as I'm looking at their chart, 273% this year. Now, what do we need to know about this name, Kevin?
Well, first off, Marley, always happy to be here with you. But I tell you, when I think about missing an opportunity, this LEU comes to mind. I mean, we traders can find ourselves working with the same stocks that we work with consistently. We fall into comfort. We trade the ones that are popular. We trade the ones we're most familiar with. And we miss incredible opportunities like LEU, which broke out tremendously here in the last 3+ months. As you said, up 250, 260% year to date, 33% month to date, 19% just in this past week. It has been really just taking advantage of this apparent shift towards nuclear becoming back in vogue again for us in the U.S.
You know, it's fascinating. I wasn't familiar with this company before it got flagged for overlooked stocks. And as I was looking it up, just in last week, it was in the energy stocks that gained the most, like you said, about 13% just on the week. But, you know, they've been center of attention after the White House pledged to quadruple America's nuclear energy capacity, you know, and hit a 5-year high after Northland initiated some coverage with an outperform rating and a price target of 205. You know, they're now well above that. They blew through that at 248.52. So, I mean, do you think we're going to start seeing more analyst coverage, bullish coverage on this company?
I think that would make some sense. I mean, given the shift of support, if you will, from the U.S. government and in the focus on nuclear energy in particular, I think it would make sense. Now, the big step, the big advantage I think that LEU has benefited from of late has been a shift that's allowed them to actually reestablish some debt at lower rates. So their cash position on hand is much larger than it has been, and I think it stands out to the fundamentalists out there. You know, the technical breakout is something we can absolutely talk about, but I think there's something underlying the surface here, Marley, that's kind of caught the eye of more than just your trader. Yes, on the chart, we broke that 7 to 8 month consolidation. We've just been riding the 20-day moving average since. The reminder that I have to offer traders and investors alike, we've got earnings coming for this August 5. And you know what? Given the massive move we've seen since the last real test of the 20-day moving average, which actually occurred on July 10 here, the stock just from that July 10 window is up 40%. So again, incredible moves to the upside. But as always, whether you're an investor or a trader, it certainly makes sense to have a thesis as to how the stock might be acting in the near run going forward, especially with a known event coming up August 5 after market close for the report.
Well, it's certainly when you look at a chart like that where you see a clear upward movement that's so sharp, you know, as far as levels that you're looking at in terms of resistance and support, you know, what are some of the areas that you're focused on?
It's a good question. You know, honestly, the chart will provide very little resistance. The one thing that I didn't incorporate in the chart that I came to after the fact is the linear regression line on both a 1-year basis and a 3-year basis. That's basically the extended level, if you will, of the line of price action for the year. And we are right at it with this close today. Now, of course, that doesn't mean anything really, but it could utilize that as a reason for a breather at these upper levels. Again, with earnings coming, you never know if we're going to get extension from here or more of a pause and a consolidation. I think a lot of traders, given the nature of the rally, would probably lean into the idea of a consolidation or pause to the push at this point, giving everyone an opportunity to trade it for the earnings window. As you can see on the weekly chart here, though, you know, if you were just going to take a very casual approach, a trader could work with the weekly and start just utilizing the recent weekly lows. The one we target here is 165, but we've just made another new ledge with this low this week, and that could be about 198 up to 200. So if I were a trader paying attention to this in this position, heading towards earnings, I'm sure traders are out there considering maybe some option positions that could give them some alternative ways to capitalize on this move to the upside in advance of the known event. We would expect implied volatility to start climbing here in the next week to 10 days as we get towards that 8-5 report.
So, and because their report isn't coming in the near term, and we are seeing this incredible move to the upside on their behalf, both in the past month and in just this past week, how much do you expect volatility to increase on a chart that looks like that?
Yeah, it's a good question. I think the implied volatility is at a reasonable level right now, but as we get nearer that expiration, or pardon me, that earnings window, we do expect that to climb, heading into that window. Now, how a trader chooses to use that IV is entirely at their discretion, but if you've been participating in a tremendous and seemingly exponential move to the upside, that volatility to the upside is much more likely to just start to wane a little here, even if we don't give back price. Remembering that we can consolidate through two functions, either a deeper pullback in price that would allow us to test a recent, breakout level around 211, 212, or we consolidate in time, and we do that for 5 to 7, maybe 10 sessions, which would be right about that window before earnings. So I guess the question becomes for the trader, hey, have we made enough of a move for a trader to pat themselves on the back and take some profits up here in advance of earnings? Maybe they're going to do just that so that they can participate in earnings, but maybe from a more comfortable investment, because odds are strong, Marley, that their investment position has grown dramatically relative to the size of their portfolio just in the last 3 months.
I would say certainly, even if they only came in this week, it has certainly grown. We appreciate you breaking down the technicals for us. That's Kevin Horner.